And we're back with another fun day in the markets. So we're looking here at the Russells. This is the Russell's 2000, small mid cap, just an index. It's not overly liquid. Liquidity or liquid simply means how much volume flows in or how much volume's traded in an individual index. So this one has 2,000 companies in them, but there's not a lot of volume traded on them. So not as liquid as like the S&P 500 would be, or the Nasdaq, or the Dow 30. But anyway, the Russells can act as a leading indicator because they're smaller companies. They're seen as being riskier. They come with more risk. And so in a bear market, it's a telltale sign when we go from bullish to a bearish market, you will see smaller sized companies sold off. So the Russells will start to drop when the Dow and S&P and the rest of the bigger companies look very strong. And the Nasdaq sometimes acts as a leading indicator also. And anyway, just taking a look here at the Russells, and we had a kind of a triangle formation here. Double top type formation. Double top formation is only confirmed if we go lower than this low, this little valley part. So we still have some area to drop here. But the thing that has me concerned is we had this run up, a run down, a run up, and here we should be able. I could see another leg dropping right here on the Russells. And so anyway, we broke some nice support here on the Russells. And while we're here talking, let's go ahead and take a look at the Nasdaq. Here's the Nasdaq. The Nasdaq kind of looks like a bear flag. Go to freetradingvideos.com, click on Chart School, and look for bear flag. You get this nice run down, this little mini-me uptrend, and which we have here, and this could be the beginning of a bear flag. What I will be looking for on the Nasdaq is penetration through this lower support line, this blue line that we have here. If we go below that on volume, and it could be a significant drop too if this were to happen. Now that's at a real crucial point here. It needs to bounce here pretty soon if it's going to. So the Russells and the Nasdaq, some people argue, that they're leading indicators, that they lead the market by just a little bit. So something you can look at. And while we're here, let's take a look at the S&P. The S&P kind of has that bear flag type formation also. We have this big run down, this little mini-me uptrend. We're at nice support. We are below the 20-day moving average, which is that blue line right there. We have support right here. If we break below that support, we could really start to drop here, and there'd be something to keep an eye on. And I noticed that today we had a major sell-off in basic materials. Today the group of basic materials dropped by 4.4%, and that's huge. To get that sort of a drop, anytime you're over 2% in a group drop, that's significant. That's something to pay special attention to. Your basic materials, just to put that in perspective, is your oil and gas, your ag stuff, your metals. And, just keep an eye on, it's just interesting to see that oil and gas has dropped. Right now, I think we got down to, on crude oil, $120 today. I think we're around 121 as we speak. Where we're at on this video. And this is as low as we've been in a little while. So very interesting to see that. And then financials, I thought were bouncing back. And, financials took a hit today of 1.3%, but for the week, what was interesting is I thought financials were bouncing back because for going back a week, we were up 3.2% on financials, and then today it takes a 1.3% hit, giving half of it back in one day. So markets looking really weak. The Dow and S&P were hanging in there pretty strong there for most of the day. The Nasdaq and Russells were way down. But then all of a sudden, near the end of the day, You know, going back about the last hour of the day, you know, the markets just took a nosedive, and S&P dropped. We're down 11 points. The Nasdaq's down 25 points. Russell's down 12. The S&P's down 11 points. That means the Dow should be somewhere around 110 points, but we're only down 42. The S&P's down 11, which is usually 10% of whatever the Dow is. So if the Dow's down 100 points, the S&P's usually down 10. If the Dow's up 100 points, or let's say it's up 150 points, the S&P would be up around 15. But what's interesting here is the Dow is, you know, what I should probably do here is just move my chart over. I'm showing a lot of my other screen here, and here's what I'm showing you. We have the Dow right here down 42. The S&P is down 11. If the Dow's down 42, we should be down 4.2. If the S&P is down 11, we should be down 110 points. So they're not mirroring each other right now. I always err to the one that's I always err to SPX, because there's 500 companies in here opposed to only 30 here. So it gives me a better sampling. So it says that we're more bearish than what the Dow's showing. Now, why wouldn't the Dow be down as much? Because those are your larger companies. So a lot of people resort back to the stronger, bigger companies in hopes to find some stability in the market. So it doesn't surprise me it didn't tank as much. And the smaller companies and these others tend to tank a little faster. So anyway, there you have it. We give you a couple good things to think about. And so hope everyone's enjoying the videos. And one little tip for you, if you're just getting started in trading, we're using a lot of terminologies and a lot of things that may be going over your head. Keep your chin up and just know that the more you hear these things and you watch these videos, the more you're going to pick these things up. Don't give up on it. Give it time. If you've been out there trading and you're taking a hit day after day after day, go to paper trading. It's okay to paper trade, or significantly cut back your share or contract sizes. Go to one contract. Go to 25 shares. Just enough to be in the game, but not so much that you're going to continue to donate to the rest of us. What you want to do is stop the bleeding. Put a tourniquet on it. Don't hemorrhage to death in the markets. So anyway, because this is turbulent markets we're in, very choppy. And if you take a look here on the S&P, if you're to go, I mean, goes back to July. Since the beginning of July, we've been in this trading range. See this? Just back and forth right here. We haven't moved out of this area. This is very choppy. This is a good time to be in cash. Being a great trader, you need to know when to be in cash. It's equally as important as knowing how to trade itself. So anyway, again, for those that are beginning, just hang in there with the terminologies and all. Ask questions. If an analyst is using a video and uses a word that you're just not sure what it is or what they mean, just ask it in the forums. There's a lot of great helpers in our forums. We have the best forums out there. We do not have egos. It is not a forum where it's adversarial at all. This is very healthy set of traders, all developing together, all wanting to help each other. So it's a very healthy trading atmosphere. So feel free and safe to post your questions and just enjoy yourself. Develop as a trader as you want to be. Trading is a life-changing opportunity for you, for me, for all of us. Let it be just that. So for that to happen, you have to develop the right way and get the right education. Take care and happy trading.